Hey traders, what's happening? Jamie Setley here. It is August 4th, 2020, and today we are going to dive into some gold charts for good reason. Gold has been absolutely on fire, right? Gold and silver. Gold's at all-time highs, and I wanted to kind of take a look and see where some big relationships come in. Um, Clearly, it's in the news a lot and everything, but I wanted to look at um, some Elliott stuff here along with some RSI actually, which is getting awfully extreme. So anyway, we've got a chart of gold. This is current gold futures, and you can see that if we take, you can look at this and see, I don't have the labels on it, but just kind of bear with me here. You can see a one up, two, three, sideways four, and then the next wave would be the proposed fifth wave. All right. Commodities oftentimes have extended fifth waves, right? Equities, we often get that third wave extension. In commodities, the fifth wave extension, you think about the psychology, why that would happen, right? Fear of inflation, right? Fear of drought in like an agricultural commodity or something. But in the case of gold, there's about fear of inflation. So that's a very powerful, um, very powerful sentiment or emotion is fear. That's why a lot of times you see commodity tops almost look like the opposite of, say, a stock market bottom, right? Where a V bottom, kind of flip that over, and that's what a commodity top oftentimes looks like. So what we've got here from a Fibonacci measurement standpoint, take waves 1 through 3, right? And then measure from the bottom of 4 and get that 1618 extension. Okay, that's going to come in at 2095. Okay, pay attention to that. You'll see why when I look back at the 2011 market, which is very similar in the way it's measured, as far as the five-wave advance is concerned. Also, I have this, probably can't see it all that well because that red line's in the way, but you can see it here. If you just take a line and connect waves 1 and 3, we actually hit that today. So I guess it's possible that you turn over here or something, but obviously zero evidence of any sort of weakness or whatever here. So for now, I'm just kind of watching. Let's see if we do get to that 2095 level. All right, let's go back to 2011 now. Okay, so if we look at this, the rally from the '08 low, right? Again, one up, two sideways down, three, four, and you're a big extended fifth wave up, right? The 1618 extension of waves 1 through 3 here is actually literally top tick from 2011. All right, so again, the current market, that's 2095. If you take the line off of waves 1 and 3 here, you actually hit the highs. So, if we're going to do something like that here and go 2095, means we're going to overshoot that 1-3 line before we have any sort of, ceiling, if you will. All right, another thing that I wanted to show you, and I'm actually going to show you GLD here in a second, the ETF as well, with the same, the same logic applied. But I wanted to put up RSI. All right. Do you see today's reading of RSI? It's 88.93. Okay. We're going to look at the entire history of gold to see when we have seen a reading like that. We didn't even get there at 2011. All right. Go back. Oh, we hit it back in September of 99. That actually was kind of the beginning, if you will, of a much larger bull market. But obviously, that was a big top. Topped out near 340, came all the way back to 260 over the next couple of years. The only other time, and this is pretty cool, that we've seen anything like this in terms of RSI was actually the high back in 1980, Jan 1980, right? That was the real crazy inflation run that we had. And we actually registered that, it looks like on Jan 8th. You had a very slight pullback, nothing really, and then we went for another big run, right? Up from 600 all the way up to like 870, and then we topped on that reading. So looking at this is actually kind of funny. If you've ever read Jim Rogers' stuff, famous commodity investor, trader, what have you, he actually tells a story of shorting gold back here because it was parabolic, and then, the next couple days it goes up like 200 bucks. So he held on apparently, and whatever was right over the very long term. Anyway, just kind of reminded me of that. So clearly RSI has only been this high two other times in history. Could we still get another blowout? Of course. Just because you have a high RSI does not mean the market has to come down at all. But when you combine it with these, this trend line Elliott analysis, if you will, along with the Fibonacci extension, I mean, pay attention to 2095 if you get there, right? Okay, now I said I'd also show you GLD. On this one, RSI actually made a record last week at 86.90. We're currently 85.80, but the same things applied here. So we've got that 1-3 line. We actually closed above it today, maybe an overthrow. The Fibonacci extension of 1 through 3 from 4, the 1618 is 194, okay? And again, I'm going to go back to the 2011 market and show you that. The magenta dots on here, by the way, indicate times when RSI has been at least this high, which is 85.8 on GLD. You can see the only times we've had it was actually in June of 2019, which was really nothing, minor pullback. And the other time was back here. That was on August 9th, 2011. Pulled back slightly, then went for that final high into the August 22nd peak, okay? As you can see here, the 1-3 line on GLD back then was pretty good, and the 1618 extension of waves 1 through 3 was 183.90, which was basically the top, right? So, point being, bottom line, gold is gone parabolic, and I am not here to predict the end of gold or demise of gold or whatever. It's obviously breaking out. It's been breaking out. It's been exceptionally strong, but markets rarely go one direction, continuously, if you will, and we've kind of been that way. Things have gotten parabolic. So pay attention to that, level. Basically, pay attention between now and between, say, 2095 or so. All right. And that's it. This is just a trade. It's not a life change. If we start to see some activity up here where on my shorter term charts, I'm getting, big volume reversals and things like that on, say, hourly charts or even less, I'll be willing to take a stand and try to go the other way. So not for everybody, I get it. But I did want to share these observations, and I hope you enjoy them, and good luck. All right, take care. Bye.